Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hello, Mr. Felix.
Hey, Marco, how are you, man?
Good. You know what day today is? It's 50th episode.
What's today? 50th? Oh, that's good. Look at you.
Yeah.
Keep it track. Good.
The 50th episode, halfway to 100.
Realize.
And it's been good. It's been good. We've been learning a lot, myself especially, since I'm here every day, I guess. And then all of our lovely people here in the chat that help us out, that like the videos, just comment, share, subscribe. Really appreciate y'all. And with that being said, let's jump into the market. What's going on?
Yeah, I mean, look. So a couple of things I think up front. We talk about the macro stuff. We saw Powell say basically nothing. It gave a nice boost to the market. Everybody, the positioning was that everyone was moving the dot points closer. He basically says, we're going to wait and see. That didn't do well for the bonds, but bonds kind of picked up a little bit, but it had that initial joke, but it really didn't do much for support. So the bonds didn't do well today. I keep saying at some point it's going to matter in a big way. I don't know when, but at some point it's going to matter in a big way. I would say that this week is always the one thing, especially for new investors, the one thing to remember is that news is just news. At the end of the day, what drives the market is more buyers than sellers. And, this week we were expecting a lot of buying, and the tax checks cleared yesterday in the morning. And so I believe it was yesterday morning. And that means they got to your account or someone's account, but that person then needed to send that money to their brokerage account. That takes a day because they don't just immediately give you that access until it clears. So, the buying is supposed to be here. It's supposed to be now. We're in that range of that buying period. And we expected this. The other thing that was working for us, as working for the market, was the dividend week. The third week in the expiration month is usually, especially in the quarter, quad witching quarters, they are usually bullish. Okay, but I can tell you that the week after is usually bearish. Okay, so we have a usually bearish week coming up, usually with potentially this now rebalancing, because that usually happens at the end of the month, usually 2 weeks around that final day, 1 week before and after. And maybe we see it, maybe we don't. I think it'd be pretty difficult not to see some rebalancing. So you probably have some equity selling, buying bonds. That doesn't mean that bonds will go up and equities will go down. It could mean that bonds go down and equities go down. It could mean that they both go up. We don't know exactly how it is, but the spread between the two might come in a little bit. And if you look at from the period of this December 31st close to where we are today, you could see equities way up, bonds way down. That spread has blown out, and the 60-40 crowd, I think, have more of a reason now to potentially release some stock, because volatility. It seems like we're in this moment in time where the market wants to decide whether it wants to shoot up or shoot down. I think the pension funds have to be. They have to be they can go shoot for the moon, but they got to be a little bit conservative because they're dealing with long-term money. So that's what I would say there. The other thing I would say on the SPY is that there's a dividend tomorrow. So the dividend is expected to be $1.20. So if you look at the SPY board, what you see is, you can always check to see yourself what the dividend is going to be. So the dividend is going to be around $1.20. But the way we can look at that is we could say, to check that, $3.95. If I was going to buy the $3.95 puts, I would pay say 228. And if I'm going to sell the 395 calls, that's $1. Let's call it $1.13. Okay. So 228 and $1.13 is 228 less $1.13 is how much?
Sorry, I wasn't.
It's
was looking at the chat.
220. So sorry, 228 less $1.13 is $1.15. So $1.15. Okay. So if I bought the puts and sold the calls, I got to pay $1.15. That means we're $1.15 lower. So that would be 393.85. 393.85 less, or 395.08 minus 393.85 is about $1.23. So we're about $1.20. That's how you do the math. Okay. That's where this is put call parity. This is what I talked to you about that video, the options puzzle. That's how you do it. And in this case, you could just figure out what the market is pricing in for the dividend tomorrow, right around $1.20.
Okay.
And that's sort of what I was seeing as reports, people saying $1.20. So it seems right about right there. That means that, you know, you're aesthetically, what it means is these might look a little bit expensive. And I'm sure that new investors are looking at this and saying the 90 puts are 60 cents or 56 cents. I could sell these and just collect that premium. And what I would say is, yes, that's true. But the SPY is really not 395.08. It's really 393.80. Right. So you think you're at 395 and it's 5 points away. It's actually only $3.83 away.
And that's priced in, right? And
that's priced in. So you can't just say, okay, I want to buy the puts, the 395 puts, because I know that the SPY is going to be down $1.20 tomorrow, because if the market doesn't move, then you're going to be out this money right here. This will trade $1 tomorrow. So you will lose money. I see. You'll lose a lot of money. All right. Because it's priced. The 395 puts are priced as if the stock was really 393.85. So you got to understand that. You got to understand it. So really, the at the money option right now is closer to the 394s. You see how it's 170, 170, 170 here, 170 there. So it's closer to about the 394s. That's what's going on there. Okay. Does that make sense?
Yeah. Yep.
So you have to always think about the options are priced off the future, and tomorrow's future is a little bit lower. It's off the forward price. So again, aesthetically, I've seen in the past new investors come in and think, oh, these are too high. They look so expensive. I could sell these. Or conversely, the calls look so cheap. I can buy the 397 calls for 48 cents. Really, it's not 395. It's you're actually, this is $2 away. You're actually $3 away. Okay. Okay. So that's why it's aesthetically, it looks like, oh, wow, this looks so much cheaper. It's because the option price is being priced off 394-ish, 393.80. Okay. Okay. All right. Let's get that through. So tonight, if you own deep in the money calls in the SPY, you would actually have to sell them or exercise them. Otherwise, you're going to lose the $1.19. So that's how the dividends work. Okay. Anybody who owns 388s, 387s, 386s, the way you decide whether or not a dividend is exercised is you can, one way is to look at the puts here. Okay. And whichever one's less than one, if 119, 120 is the dividend, let's say 120. So this is greater than 120. This is less than 120. So for sure, you're going to exercise this, because they're less than $1.20. Okay. If you got the in the money call. So if you own the 390s, you're going to get rid of them or exercise. Okay. Because what you're really getting in return is stock, and you're giving up the put. So you're getting stock. You exercise, you get stock, you get the $1.19, $1.20. But what did you give up? You gave up a 60-cent put, 59-cent put. I see. Okay. That's how you got to think about it. It's first time you hear that, it might be a little confusing, but the point is that there's a dividend. And if you have in the money options, you have to exercise. Okay. And there's games that the professionals play to actually try to take your money. If you don't know that, you have to exercise. So this is important. It's important to understand. Okay. Fair enough?
Yeah, I love it.
Good. Nice. Now to go further into the SPYs, I want to show you something. I want to show you the SPY board as far as the open interest, and how we always talk about how I'm looking at the board, and how you guys, I think, you can get some real value by looking at the open interest board. It's the reason I created is people want to know my process or what I'm looking at. This is what I'm looking at. Okay. What am I looking at? I'm looking at 380 to 395. Okay. We were just at 380 2 weeks ago, right? It's not like it can't get there. But what do you see? Just looking at this, where's this purplish bluish thing lining up? It's all in the March 19th. A lot of it's right. Everything is disappearing after March 19th, which is tomorrow. Okay. So that means on Monday, we get to live with what's over here. And what is over here? I don't see much. Do you see much?
No.
Okay, March 26th, next Friday, you have the 20,000 here, 18,000 here. After that, nothing. Here's 12,000, 10,000, 32,000, 18. Okay, this is April, though, kind of far away. The April 385s, those are going to be worth a pretty penny. So those break evens in April are closer down to, the risk reward break evens closer down to 370 probably on this 365. So if you're long these, you're thinking much further. Somebody could be long this put spread here, 30,000, just one person, right? So what I'm trying to say to you is just look. It's not me making up a story. I'm showing you where are the put buyers, where are the people that are hedging right here in the SPY. And remember, SPY is one of the biggest market in the world, most liquid market. What happened? Remember, I told you in yesterday's podcast, be careful of the push, whichever ways it goes, down or up. Be careful of the reverse. Right? The reverse, because what they're going to do is, again, how do people psychologically work? What they do is they sell their positions quickly all at once, and then their winners, they just kind of layer out. Just it's like an emotional way that people do their trading, okay? In day trading. And what I'm saying to you is that on the push up, okay, everybody's selling their puts, and you can see that. Look at, there's no more open interest. Even in March, a lot of the open interest cleared out. There was hundreds of thousands of trades yesterday, and as soon as the market went up, everybody sold those puts at a loss. Okay, and they're cleaning out of the calls. Then they left the calls because it looked good to the end of the day, and the market wipes them out in the morning and drops it by almost 1%. So this is when I say that the market is going to get evil here. It's going to get evil here. It's going to prevent the most people, from making money. Okay, so wherever the most people are positioned, it's not going to go that way. It's going to try to move things around, and that's the reverse. So what we have here is a situation, okay, very clearly that there is no puts. Now, there might be a little bit today, and we can look at that. There might be a little bit lining up for Monday, but I looked already, and there's not a lot of volume for Monday. The volume is set up here for March for a big move tomorrow. Do we get the big move? It's likely when everybody's waiting for the big move that we don't get it, because everybody's positioned with puts and people positioned with calls. So when it goes up, they're selling calls. When it goes down, they're selling their puts to close because it's all got to collapse. That's where you get this sort of gamma well in this the pinning. So that's another video on 3 steps to go and look at to really understand the mechanics there. But what I'm saying and making sure that it's very clear for everybody to see, there's nothing in March and after March 19th. And after that, you got this wide range of dates all the way through April 16th, which is 2 weeks, which we think April 1st is important. We think this final month date there's something to be had there, and it might be really bad. There might be a significant amount of selling that comes in. Remember, we had a week already has passed, and we had all this inflows of dollars, okay? And now, after that inflow of dollars and everybody's in, the paychecks come and everybody's in the market, now we have this outflow of dollars because of the rebalancing. What's going to happen there? To give you an idea of how powerful the rebalancing could be on big moves, here's the market. Here's the SPY. I just took the SPY from 1 year out, and on March 23rd, this was coronavirus collapse, shaking, collapse, shaking a lot, collapse down to 215 trades on March 23rd. Trades here, this was, by the way, this happened in the last month of March. This is the end of the quarter on March 31st. It literally took 6 days, 1, 2, 3, 4, 5, 6. And we had jumped from 225, 215, 225, around wherever you want to call it, up to 260. Okay. Before it came down a little bit and then shot back up right to the end of the month. It was 6 days in front of the month. Well, how many days to the end of this month? I mean, we're just the opposite right now, where equities have exploded over the course of January, February, March. And, and bonds, you could just look at the bonds. So the spread is basically, this has been a disaster from here, January 1st down to here. It's an absolute disaster. Okay. So this is a massive move. Do we get the same, bond bid and by the way, this is so shorted right now. If you get any type of bond bid, you might get to push a little bit extra, a couple points here. But you get this bond bid, and then S&P sells off. Maybe that's how you would expect it to be. That's sort of the trade we're looking at. So it's something to keep in the back of your mind. We've talked about this at length over the last 6-7 weeks about the mismatch of flows. You can look at it and say, yeah, there's money coming in, money coming out. And that's a simple way to look at it. But in reality, what happens is money comes in during one period of time, money comes out during another period of time, and you got a mess. You got a complete mess. And giving that backdrop, because we always talk about, Felix, how do you come up with ideas? Given that backdrop and showing you what I've just showed you here, you could see for yourself, there's not really any puts. So if this market starts falling by the end of today, or, tomorrow it's going to open up, let's say it's flat and it opens up $1.20 lower, 293.70, we start getting closer to this 290 level. I wouldn't be surprised if it sort of squeaks down towards the 291, 290 level, where this goes to zero. This goes to zero. Everybody's positioned here. It's going to end. I think there's a good chance it can end somewhere around here. Okay, maybe even go through 389 and then come back. If we have a down day, if we have a down day, it can go through 390 for the moment, 388.5, and then end up at 391, something like that, where this all collapses, and then you even got your calls here in the 390 level. These go out, basically. They get hurt because it's likely that these are already hedged. So there's opportunity here for something to happen in a big way next week on the downside. That's what I'm concerned about. We have these 390s. They shouldn't have been stopped. This one, we might need these. Some of the names that we have are trading okay. They're trading well. Some, we had a disaster yesterday, WPP. So, there are things, I'm trying to set the portfolio up, and I'm getting increasingly nervous over the next, call it 48 hours. I will be watching very closely. I might even add a put within that time. I just want to see the close here. I want to see how it trades. Usually right before the dividend, you get a move higher, usually. So we'll see, but it's not trading great. There's pockets of strength, but TLTs matter at some point. Okay. That's my SPY. And by the way, I wrote here the quote of the day. Do you know what the quote of the day is?
No. What is it?
Quote of the day is, so they asked Biden if he believes Putin was a killer, and his response was, "I do." What I thought was pretty amazing that he would say that, but so I read the response today, and Putin says, half joking around, half not. He said, "Takes one to know one." I just thought, here's two guys, like two killers, telling each other like schoolyard kids, this is,
right.
Takes one to know one. I said that when I was 4, I think 5.
Nice.
Anyway, so that's that. So that's SPY. What else? What are you seeing in the?
Great. One thing I'm seeing is GM, and before we jump into GM, I just want to ask everybody to smash the like button because it really helps us with the YouTube algorithm. And when it comes to GM, I've seen, what did I see? Let me see. I've seen April 65. So they keep coming at this higher and higher. We made some good money on it. I had 100% exit today. So
good.
That was pretty good.
GM. Look, in 400 after 400 ideas, I can tell you, I had never had an idea where I had never had an idea where there was, I had the same idea on at the same time. Potentially, we started with the June 50 calls, and most people probably have squeaked their way out of there with a good return. And then I jumped into the 60 calls. Yep. It's the first time that I had ever jumped into 2 calls that are potentially open at the same time. I can't tell you how much I love the GM story. It's good. I can just tell you that should give you an idea. The GM story, to me, it feels like somebody knows something. It feels like the market is anticipating something big. They've been buying Aprils. We've seen that over the last couple of weeks. I chose the Junes. I like a little bit more time. This is something that I think, if they say something, and I'm sure they're under a little bit of pressure just to kind of release some of the value within the company, the stock's going to trade 70, 75. People are coming at the way they're coming after these calls smells like somebody knows something. I don't know what they know, but it smells like they have the goods. When you have the answer and you're you're running to to make some money, it smells like they have the answer. So I would look at that and really, I don't know. I like the name. There's nothing really wrong with the name. I think today they're probably, looks by the IV, the April 60s probably are being sold a little bit. But then I see the 65 calls. Let's just see what these are doing. These at 10 o'clock came in. Let me just look at the time. I can't. It's hard to read. It's hard to read just looking at the blocks or how it came in. These look like they were bought. So the 1005s, these look like they were bought here. The 65 calls at $1. Let's call it $2. So they're paying for the April 65 calls. They're off a little bit now, but they're paying for those at $2. What do they know? I mean, to buy $2, they got to be thinking 73 or so, 74. It's interesting. It's interesting what they're buying and seeing what they're buying. That's why I'm saying on a market down the way it's traded today, this thing is trading well. It smells like someone knows what they're doing here. Okay.
Right.
And not only that, but they've been doing it for 2 weeks. Right. So I would say that this is something that, is it late in the game to come in? I don't know. You see they're still buying it. So I wouldn't say release just because it's up to release all of your calls. If you have a third, take a third. If you have only one lot, if you only had one lot, then you could do that. You have the Junes, for example. Let's see the Junes. We have the June 60s. They're about $6.5 today. So $6.5. You could sell the April. There's no event. People are buying them for an event, but there's no event listed. So You're betting against an event there. So you can sell, even to take some profits off the table, you might be able to sell, the 70s at I wouldn't even do that. I would basically, I don't want to release all the Junes because I think this thing could run. So let's see here. June 60s, 6. Let's go to June's here. June 70s, 60, 70. So if we paid around 3 and change for these, 3 and change, you take the 70s for, I wouldn't even do it in June, probably gets almost as much in May. 67s. If you could have sold these at $5, if you could have sold these at $2, then you can take, and you pay 3 and change on the 60s in June, then you can actually take $2 off. Basically, is almost all your premium that you put up. You'd have $1. You could do it with Junes as well. Junes are going to be now 260. So you could basically sell one and get into that 60-70 call spread for, what would be 70 cents. And that would be something that you wouldn't have to look at. You've just taken 70% of your money. If you have a 1 lot, if you have 3 lots, take 1 off.
Right. Nice.
Right. So something like that. That's how the 1 lot is always tougher. But what I like about it is that what I like about the call spread is that you can take your money. What I want is for you to take your money off the table. That's really the goal of as things are moving. And so by selling the 70 calls, you can take 70% of your money off the table, 75%. That's, to me, I would do that. Or you could just sell it and say, you know what, the market's a little frothy here. I'm going to come back next week and we'll see what happens. So, but I like GM. I love GM.
Nice.
Where can it go? I mean, this one is, who knows where the market's going to value their cruise or the other smaller business that they just started up. Who knows where the market would value those things by itself? Nobody knows, right? And they're being funded at $30 billion, 40. That's where they're funding at. That's where people are investing. Private investors are putting their money in. In the public market, you got to put a premium to that, right? People are going to pay more. You're not going to pay the same price, a smart guy in the private world is going to pay. You got to pay sometimes double that, right? You see the IPOs come out, they're double what it is. So what is that worth? Nobody knows. But if they make an announcement, I think GM could jump $7-8. I think easily $7, $8. I
Right.
didn't get close to $70. So anyway, that's enough GM. But I love the stock. It's on a move. If you want to just real quick, 49.57, a move here. You see, it's just lockstep moves here.
Mhm.
Okay, and now we're making a move here. So 40 to 56 is how much? 16. 16 plus 49 is 65. So at 65, maybe this thing calms down a little bit. I mean, it was trying to make the move today with the market, not trading so hot. It's still trying to push here. But something to look at. Something like I think, I don't think you start adding here. The 65s in April is aggressive unless you believe something's happening. But I like our position.
Cool. Great.
Good. What else?
I love it. I love it. We had a lot of great comments on GM, and a lot of people exiting, taking their money, which is great. They're following the plan.
Good.
And the next one, we talked about this the entire week, I guess, and even some last week, is Facebook.
Facebook, yeah.
Yeah, Facebook, 300 calls getting in again. So that's pretty cool.
They love the 300 calls, and they this is, I mean, the stock, with all the negative news and everything that's going on, the stock looks, it trades well, right? And yesterday I was looking at this, and it's right at, I'm just connecting dots, this dot to this dot, and I'm just going to put it there like that, and look where we are. Right, we're right there. We're right there, and the volume has been picking up the last couple of days. You're still getting 25. What's that? 25 million shares, 22 million shares. So the volume's there. I'd love to see a little bit higher volume, and I think if you get some sort of news, it tends to happen like this. You get some sort of news, and you get to like 290, and the volume is strong. Then this thing's got legs. This 300 can get wiped out in a second. It can just go straight through like that.
Right.
You need a good market. Like, we will need a good market, and that's up for grabs. But we've been talking about this Facebook. They've been coming for calls here, all here, and they're still coming for calls, right? So what are they coming for? April 300s probably.
Yes.
Let's see here. Where are we? Facebook. I mean, we've been talking about this for a while. The story is simple. What's intriguing about the story is a few things. It's the type of investor that's getting in. It's odd. You got value investors talking up the stock, and then you got momentum guys looking for options because they see momentum in the name. It's like one of those names that it's hard to figure out what's going to happen. Part of the reason that it's like that is because this antitrust potential lawsuit is looming over their heads, right? The Biden, administration, he's putting people in there that weren't necessarily pro tech, but at the end of the day, you have to worry that whether or not on the face they're supposed to say that, but really the people that put these guys in office and put that administration office was big tech. So big tech gave them all the money, and now they're gonna put some lawsuit on them. I think the Democrats want to get elected again. I think they want to put a lot of money. They want to get a lot of money for the next election, and next election is going to be a dogfight as well. So I find it hard to believe that something's wrong there. Something's wrong.
Right.
Collecting all the money and then trying to destroy the people that you collect the money. I think they have to talk a big game. I'm not sure if anything will ever get done. It'd be one of those things like, oh, we don't know how to do it. How do we shut this down? How do we do that? It's a bigger problem. They'll wait to the second administration to say nah. To say nah, there's not going to be antitrust. So that's Facebook. I see here that they got the 300s here. It looks like these at least look like a buy here. This one here, I'm not sure. It might have been a sell. 1010. Yeah, see on the bid here, 1010, 32.2. Where's the 32.2? This could have been, it could have been here. Let's look at the time. I want to just see how it progressed right around that time. So 10. So here we go. We're going into this. So it's 381, 83, 88, 99. 75, 74, 77, 75. Yeah, so it looks like it just quickly went down, but the market was also probably moving down a little bit here. It's hard to say. It looks like there might have been new buyers, and it also might be some sellers early in the morning. But the 300s are active. They've been active. People want them. It's odd because there's no earnings. They're simply just playing some sort of breakout. and that makes it a little bit odd. If the what I'd like to see is, these Mays, these Mays here are interesting. They cost $11, but again, if you get a good earnings, it's trading. I think Facebook could trade 340 on good earnings. That's what I think. I think if they blow it out again, they did the last time. They didn't get a lot of credit. They blow it out again. I think it's going to be hard to avoid for as a portfolio manager. I want to show you because I keep on going to this, and talking about what type of managers are in. Let's see, which one do we want? Let's just do. I know I'm doing it the backwards way, but I know that they're in this name, and
Expedia.
yeah. No, I just wanted to get Melvin Capital, right? So we've seen these, we've seen how they performed. Expedia's gone up huge, MasterCard, Visa, but look at this number 4, Facebook. Put 4.4, almost 5 million shares came into work, at the time, at the end of the year. Seeing these calls, and Melvin's a big user of call options. You could see here 21,000 here. He has 15,000 there, 26. Melvin was wrong with GME, but I will keep repeating, he's one of the best in the game. And when he's in some of these names, you want to at least look at them. You want to understand and maybe try to put together what he's doing or what he's seeing. The Las Vegas Sands. It's not coincidence that some of these names, we have been in. This is a guy I study for a very long time. He was part of Steve Cohen's group and then branched out on his own. He's very, very good. Very, very good. You could see here he was already in front of, this is December 31st. He was in front of he switched his portfolio around tremendously. He was in front of the opening movement, and that's where you got the Expedia, Visa, MasterCard moves up here. But also take a look at this Facebook. And I would call, look, he's value plus momentum type of guy. He's looking for that spark. He's moving in and out of these quick. He's somebody that I would highly recommend people look at his portfolio just to see what he's buying. So that's Melvin, and that's Facebook. What else you got?
Okay, awesome. Nice. I love it. Next one I got is a good one. I think you're going to like it. It's Snap. But before we get into Snap, guys, make sure you like the video.
Snap.
We appreciate it. And smash the like button. Subscribe if you haven't. Yep. Snap. There was one particular buy, I think, in April as well.
Yeah. I'm just looking at the chart here. Okay, so let me just see something. I love the social media names, and even in what seems to be a tough tape here. I just think that there's the opening has caused people to think nobody's going to be on their phone again. But I think it's like anything else. Once you start doing something, once you start using something on the phone, it becomes, and you've done it for a year, it becomes part of your daily routine. And I think that people will stay on. I think they're not giving these social media apps enough credit that people will be continuously be active on these things. So if I'm looking at Snap here, clearly there's something here, and looks like it was pretty volatile, but something around here where it was here, and then we went through 3 days here where it re-caught the 56 level. So 56, and then over here is 73. So Snap has found a way to monetize well, and they've been doing well there, advertising. People like the name. Obviously, the stock has gone from 24 to 72. This is Snap up to this point was, can I get users, right? This is sort of like, here, what do we call this? This is like a new stock, right? So this is like ground zero now, right here, 34, right? This is the day they come out with earnings. They basically say, okay, we're now gonna actually try to make money, okay? And after years of not making money, after years of not producing the amount of revenues you'd expect from that type of company, they've basically said, okay, we got all the users, we're sort of maxing out on our growth in users, and so now we're going to switch them on and we're going to start making money. And when they can do that, you can see this thing starts exploding, because for the first time, people start actually. There's one thing to model something. There's one thing to model how, okay, you have 200 million users, but you have no revenues. What does that mean? Right? It never in before all the social media names came out, it's very difficult to model that. You just got to come up with some fantasy and say in 5 years we're just going to turn on the switch, advertising is going to go. You can write it down, you can research it, you can think about it, you can conceptually understand it, but it's not until the company actually tries it and it's going to fail or succeed. And when it does succeed, and all of a sudden people say, wow, this is the power of what we did here for, and it can go back, you can go back for years. All that work we did here, all that work where we were getting users and telling people, don't worry about it, don't worry, we're just going to build our user base. All that energy is now being monetized. And when that monetization comes, all of a sudden Wall Street lights up, and then the numbers start making more sense and saying, look what we did here, look at this quarter, look at year-over-year growth. This is a brand new stock. This is a brand new stock right here. And this is where the big boys are now saying, okay, it's definite value here, 38. Okay. And that's how you see with the volume. So there's definite value at 38. And then the next quarter comes, boom, hits it good. Now they're buying. What are they buying? The earnings again?
Yep.
When Snap earnings?
It's April.
Snap.
April 20th.
April. So they're buying April 20th. So look, they're actually buying here. I see 9,000. There's some here, 26 for next week, but 9,000. Is that where you saw the volume?
Yep.
Oh, there we go. 9,070. There it goes. 9,000 of the 70 calls. I'm sure this is buying. Okay. Coming in here, taking the implied vol up. So the implied vol, that yellow line, this one's easier because the yellow line's starting to move up. Stock was down here in the morning, and looks like it started trading up here as the buying started coming in. So I would say this one is a buyer to check. 60. So 74 is where it started today. And you could see that the implied vol was moving higher as this was going through. 79, 80. And then after it was done, it seems like it's going to start having come back. Or no, it's still around the 80, 81 though. So, okay. So I would say that is a buyer in Snap. Makes sense to me. I know that, again, you get another quarter where they blow it out, and they've taken this down right here because of why? Because of the opening. Okay, the economy is going to open up. People are not going to be on these media on these media apps, on the social media apps, and so we're going to take the stock down, or we're going to at least lighten up. But somebody here is basically saying, nah, I'm going to buy the 70 calls, because they're not buying the 70 calls to go to 74. They're buying the 70 calls because they could believe what? Paying almost $3 for the 70 calls. They got to believe
85.
It's out of the money option. They got to believe something like 85. Is that right?
Oof,
85, 86. Sorry, 86, 87. I mean, yeah. So it's a $3 call, $3 call on the 70s with a 25% probability. So, you're talking about a 4-to-1, 3-to-1, sorry, 3-to-1, 25%. So 3-to-1 payout. So you multiply this by 4. So 3 times 4 is 12. 70 plus 12 is 82. That's just your break even. That's where you get this 82.45. That's just your break even. That's risk reward break even. I mean, it's over time, you make no money doing that. So they got to actually try to make some money. So they got to think something higher, which is how we get the 88, maybe even the 87 type of number. Okay. You can increase confidence and then reduce this down to like 85, but you got to increase your confidence. So it's still a high number. It's still a high number. So that's how I look at it, right? It's 80 is the default, but if I'm going to raise 80 to 90, then I can reduce my, this was 80. I can reduce my target stock price to 85-ish to still get this strike.
Right.
Make sense?
Yeah.
So you're playing around with this to try to figure out where they think. So if I think 85, then can it get to 85? Well, it just did this 52 to 74, 52 to 74, 56. This is this line right here. So let's cross this out right here. It did go through that, but let's just take, because it's doing these lock steps, let's just take 56, which seems like the level. 56, 73 is how much? 17. Right? 17 plus 73 is 90. So if it makes this big move, it can from here to here, it can go up to 90. Or you can look at it, let's see, 48 to 73, 30, 25 to this. Now it needs, you need a bigger number. So 80, 85. They're looking for a good number, breakout up to 80, 85.
Cool. I like it.
All right.
Awesome.
Let's see here. Let's see. What else?
What else? Banks are doing really well today, it seems.
Oh my gosh.
Yeah.
Banks. Yeah. Well, here we talked about the banks, and we might as well just call them the new internet stocks, because they will print money. They will actually print money. Trust me, these banks. So here are the bonds. You're looking at bonds here, and this is 20-year rates. So when you have a yield curve that is basically here, you can look at a yield curve, and you have time here, right? And then you have interest rates going up here, and you have, basically, this is like, call it 1 month or 1 year, and this is 20 years. 20-year interest rates are up here, and this is over here, like close to zero. Okay.
Right.
And so you have this difference between this and this. This is where they're making a fortune here, just printing money every day. They wake up and they're making a lot of money. This has just moved up, so this has stayed the same. This has just moved up from here to here. So they were just making this. Now, with interest rates having moved from here to here, they're making this. It's incredible. It's literally printing money. It's like a license to print money. So until housing blows up, or commercial bonds or corporate bonds blow up, or something blows up, they're going to be printing money. They lose money when people can't pay their loans and they get stuck. So that's your quick lesson on banks. And then you can look at JP Morgan. As soon as interest rates start rising, the back end starts rising, not the front, just at the back. So it widens, that spread widens. You can see how the market just takes it from 102 to 160. It's, I missed this pullback here. It bums me out because I was seeing what was happening, but I know some people call me and say, oh, thanks, they bought the Bank of America. These guys, they print money. There's nothing else to say. It's like, it's the easiest money in the world until the spreads in corporate bonds or in junk bonds start widening, or people go out of business. People go out of business, these guys are going to get hurt, plain and simple.
Right.
So what are we seeing in the banks? I mean, there's got to be call volume, JP Morgan, Bank of America. What are we seeing?
It's all over the place. It's all over the place.
Let's take a look. April. So April's the big earnings month here for these banks. So people setting up, vol up a little bit. Yeah, they're lying in the 40s. They're playing in the 40s. You could see that, you're talking about, this is right over here. I'm looking at, this was normal. This, I think these can, I don't want to sound, I don't want to sound crazy, like crazy person. I think the banks can double. That's how much money they are making. It's incredible. Now I'm waiting for pullbacks, which we might not get these things. Just go look back in time when the same thing happened. These things trade like internet stocks. It's like they print money every day. Not only do they print money every day, but they actually are taking money every time you want money. Now that there's not even cash anymore, but if you take money out, you wire it to someone. You do anything, they take their fees, and yes, they're under attack by fintech, but I got to believe that the banks aren't stupid. They're going to make a fortune in this next year. You're going to see the numbers. It'll be billions of dollars. And then what they'll just do is they'll just start buying a few of these smaller fintech names and take their technology and then incorporating them. That's how they'll fight back. So I think you will have the private equity world in these fintech products, I think, will actually be a boost to the banks. They'll make a ton of money and then they'll just go buy someone. I think you'll see some of that. Who's one that's already in fintech? You gotta look at like Goldman Sachs. Goldman Sachs has done a great job. They're a fintech company too. People may not realize that, but they own a lot of these little companies. They go in, they invest. If you have X number of revenues, they put money in, and now they own 30, 40% of these a portfolio of companies. Right. They're fintech, and they're going to incorporate those fintech projects into their own Goldman Sachs whenever they're ready. Right. They have a stable, they invest, and they find smart people. They see what you're doing. They invest a little bit. They give you a higher valuation. Hopefully you make money, and then they also become your customer, and they take that in-house, and they say, we're not even going to let you go private. We're just going to buy you out right now.
All right.
So that's, the Goldman Sachs is very interesting. It's very much fintech. I think a lot of these banks will start doing the same thing. Okay, but it takes a lot of time and a lot of money and a lot of know-how to get in there. So look, I would say the banks, give me a good market and a yield curve like this, the banks double. Okay, and it's much better than it was. If you look at coronavirus where they were last year to where it is now, it's like night and day. Okay, and the banks are just going to be on fire, and they have been because of this. Just keep looking at that yield curve. The yield curve is not coming in, and they don't do Operation Twist. Operation Twist is where they would basically rate, buy the longer bonds and sell the shorter bonds. That would be the Fed coming in. Okay, banks are going to come in because that yield curve is coming in, but he doesn't seem to want to move it. Powell seems okay allowing the yield curve to be the way it is, which means he's literally winking at the banks going, make as much money as you can because we might need it in 2 years. So start saving all your money because we're going to need it. And we can't let the banks, when this thing does crash, the banks need to make sure, we got to make sure you have money. That might be the signal for all I know, but it sure seems that he doesn't care about anything else, but he's telling the banks, go make as much money as you can.
Nice.
You got to think about that.
I like that. Yeah.
Awesome. I don't know, but that's what I see, right? You got to follow the money. You got Powell winking at the banks going, just print as much as you can. And maybe he's telling them back, save it too, because we're going to need it in about 8 months, right? As soon as I start saying, okay, I'm going to start raising rates and the market goes the other way in a year, whenever he decides he wants to do that, then we have, we can have some problems.
Cool.
Okay.
Cool. Hi. Cool. Okay. All right.
By the way, there's more and more people coming on, and I just wanted to make sure that people see that what I've done here, I highlighted this. So we're here. I don't even know if this is on right now. Okay, this is the pod. You can watch the podcast online here if you want. I like YouTube, really, to be honest. I just gave you some ideas, and I'll change these here to give you pictures. But what I'm really pointing at is if you're new and you want to know what we're doing or how we're thinking about things, there's a lot of information here, including this step 1 of 3 steps. So I left that there. It's there for you to watch. It's there for you to understand. It's puts and calls my way, the way I teach. I think you'll get a lot out of it. I think you'll see that things are clear. I have a proprietary way of teaching. I don't show it. Some people they see something different in there. They take the course and they learn faster and they retain more. I've done a lot of research on teaching and trying to find my style and how that works. I think you'll like that. Step 1, this is step 1 of 3 steps to profit. There's 8 steps in there. This is step 1. So I would say if you're even just beginning, I think you'd really like this one here. To be honest, I charge, to give that lesson and the follow-up, which is the options challenge. I charge a lot of money on Wall Street to actually per person to give this. To give this live, and I'm giving it away for free. So I would say it's worth it. I would say take a look at it. It's worth it, and it'll get you going on the options challenge here, which is good. And then you'll realize what you don't know on the options challenge because it's a simple question, a simple game that I created, but it's pretty good. Next. 10 core beliefs. This is where everyone should actually, before you ask questions, before you really get too deep into all the different podcasts, really focus on these 10 core beliefs. This is what we believe in. This is what I have put out there and sit out there and saying, in order to play this game that we're playing and the way we're looking at ideas, these are 10 things you got to think about and 10 things that you should understand how we think about it, right? You want to be part of the community? By all means, no problem. We want the community to grow, but we want everyone thinking the same and understanding the same things. Okay. And I think these 10 things outline that. We talk about a process here and a plan. And lastly, if you're interested, I have this Winning Picks ebook. We're talking about ideas and developing ideas. I put out 148, I think it's 148 ideas that I wrote out, the analysis, complete analysis. And it's the thought process. It's the nuances that we're talking about. And after going through them, it's a resource book. These happened over the last, call it, year and a half and over a 12-month period. This was March to February of 2020. And, the idea is for you to look at the idea, read the analysis. On that date, you have all the charts in the world you can look at. Now you're going to look at the chart. You're going to see the analysis. You're going to see what transpired, how it worked, how we were thinking about it. How I also have the results there as how we were stopped out there. Trades that went up 1,000%. I marked it as it was a stop. Why? Because it went down to about a loss of 60, 70%. And so the majority of people should have been stopped there. Not that everyone did, but conservatively, I just said it's a stop and I won't take 1,000% gain or 500% gain. So I think it's important to go through that book and use it as anything else, as a study guide for what we're doing here, how we're doing it, and the process we're using. So that's my 2 cents, that for anyone coming in, take a look at that first. Take that class. There's also there's so much in the top 1% that you'll get out of, and everything that we're seeing here will start making much more sense.
Nice, great, awesome, Felix. Thank you. It was great.
What else we got?
We got one that I like.
How much time you got left? 10 minutes. 10 minutes.
Yeah,
okay.
Let's finish strong. Let's finish strong. Okay, before we do that,
Okay.
make sure you guys like the video and subscribe if you haven't. But let's look at eBay. I love eBay. eBay is really cool.
eBay. I like eBay. eBay is let's see here. What's going on in eBay? eBay's just getting going. This CEO has been there for about 1.5 years. Looked at buying earnings again. I think if he gets it right, if he gets this right in a good market, this stock is another stock that's going that has great potential. I think it has great potential. They're doing the smart thing, and it takes time, right? It takes time. So what they're doing essentially is they're saying, you know what? there's this huge market for people to sell things. And what happened, the real problem with eBay is the trust factor, right? Mm-hmm. It lost a lot of trust from people. And over the years, it's, there were people on it, but the sellers, you couldn't trust the sellers. You couldn't trust what you were getting. Was it real? And this is a problem for a major business who's in the business of being in the middle, of being a middleman. And so this new CEO, one of the things you can read his transcript, he probably says trust 100 times, because he knows that if he could just build trust again, they have 180, 200 million users or something like that. It's ridiculous how much. We just talked about the Snap and the social media. This is a situation where if they can get that right, that trust, they can build it back, they're going to explode. Now, what are they doing to get that trust back? They're basically guaranteeing anything that comes to you, it's guaranteed it's real. And if it's not, we'll give you your money back. It's like, wow, okay. So if I go buy, somebody says they want to buy a fur coat, and it's a Chanel fur coat. Some woman says, yeah, I'll buy that. Comes and it's not Chanel. eBay is basically saying, if it's not real, we'll basically make you whole, right? So they're taking out the fakes out of this system, which was a big trust factor, right? That's one. Two, what they're doing is which is really smart, they are tackling the sneaker market. eBay sells more sneakers than anybody in the world, by the way. I think it's incredible how many sneakers per second. Nobody knows that. But now what they're doing is there's this whole sneaker market trading sneakers, right? Who would have thought? I could pull out sneakers. Half the sneakers I never even wore, from the back in the day. They might be worth money in my closet. So the point is that there's this whole trading market in sneakers. And a lot of the millennials, 20 to 24, are using it. 20 to 24 kids are not going to eBay. But now they're getting into this trading market where the sneaker millennial is saying, you know what, I want to get in there. All right, what's going on there? I want to see. Not only that, they're doing baseball cards, collectibles have been huge. So they're making that whole collectible part different, and they're attracting that new buyer. And what they're then doing is they're then saying, we're gonna build on AI. So now they got artificial intelligence, and artificial intelligence needs what? It needs data. It needs people. The more people that are on, the smarter it gets. Well, they have 180 million people that they could start inviting back. And so when they see a millennial come in trading sneakers, and they're also showing them, baseball card collectibles, and they know how to get people to start clicking around and start looking at everything else on eBay. Man, what's that going to do to the stock over time? This is the first quarter really that we saw a really positive boost. But I think I think that this CEO, I think they put him in here. I think he's pretty good. He sounds good. He sounds confident. And I probably should look at his incentives, how much stock he has in an incentive to get this up, because he's telling a great story. And I would invite everyone to go to the transcript and to take a look at what he's actually saying, how he's saying it. And it's a longer story, but they need to get people back in there to building trust. They're willing to, the sneaker market, you have sneaker market trading stocks in the private market that are valued at $1 billion to $3 billion. eBay's like, okay, we're just going to crush that, and we're going to allow people to sell their sneakers at a very reduced cost, because that's going to track in, especially if you get an influencer, somebody who's actually selling a lot of sneakers. You get him on eBay, all of a sudden you got 1 million millennials that are coming in and they're starting to be active. That's positive. That's really positive. So eBay is one of those stocks that they have left it for dead, and now's the time to maybe look at it and go, okay, maybe this eBay could be a double over the next 6-7 months. This is something. Show me good earnings, and you're going to start getting some big money coming back into the same. It's not terribly expensive, so you're not. It's not like you're paying up. It's one of these where if it works over time, it's going to be explosive. So that's what I would say about eBay.
Cool.
Okay.
Cool.
Now, what did they do here? Let's just think through it real quickly.
May. Look at May.
eBay. Did I already pull it up? eBay. Where are you at? eBay. Look at May. 11,000. Oh, okay. So I look at first, I'm looking at this right here, 4,000, right? 4,000. And it looks like somebody's getting out of this position more into this. So I don't know if it's a sale buy, but we can look. 37 implied vol up one. So it was 36 today. See the spread there, 3,500, 330 on the bid, 35.7. Okay. So they sold that. And it's likely they bought this 650, 600, 38.8. So they bought that. Okay. So you got to like that. That's someone that is increasing the leverage. They're taking probably some profits here, and they're increasing the leverage by taking the 70s. To get the 70s, they're thinking, you're talking 70s way out of the money here. That's 11 points, 80 cents. They're looking for a big quarter. They're looking for a big boost. So framing it, let's see the weekly for a second. Okay, so this is the weekly. Let's just do this right here. We'll do the weekly first. So because we're thinking a little bit longer term, sort of end of the year type of stuff. Okay, so we got 45, right? Somehow hit here, broke through here. Support was there, right? So that's one. And then you got this, you can see this large move from coronavirus, although I'm not sure you can actually do it the way I'm doing it, but I'll do it anyway. So let's say from the low 25 to 60, it's 35 points. 35 plus 45 is 80. So call that shoot up to 80. Then you would have this big move like that. So what did we say? There you go, 80. See, 70. So nice. If they're thinking 80, this would be the one. So they're only buying this one at 85 cents 6,000 times if they thought that there could be a significant move. Okay, so there you go. I mean, it just happened to work out exactly the way we did it, but that's the math, right? 25, 26 to 60, right? So that's again around 34, 35, and 34, 35 plus 45. The low is 80, 79, 80.
Nice.
Okay.
Awesome.
So I like eBay. I do like eBay. I like what they're doing there. I think it's worth a look.
Cool. All right.
Cool.
What do you say?
Any
We
questions?
finish strong. We got let's say we got a question here. Let me just pull it up, and then I have also a comment I want to show you. Just a sec. All right. Not sure exactly what this person means, but maybe you can decipher.
Do you promote having a long-term account over options? What does that mean? Long-term?
Not sure.
Stocks? Like, okay, so do you promote having a long-term account over? I like long-term accounts. I mean, there's nothing wrong with long-term accounts. I would say that there are certain names that I think that with the options, you could see where they're buying and where the money's coming in. There's nothing wrong with being long GM stock, and just holding that. It depends on who you are as a person. Depends on most people who are trading options is because options are a faster game, right? You can get the leverage. It's leverage. Stock is, you can do it without leverage, but you can just buy good stocks. I think the options market can identify good stocks. And so this podcast is not just for options traders. It's for people who are looking for trends and potential large movements, right, in stocks. And so when you're seeing, sometimes stock ultimately works better than the option, right? The option expires, but the stock traded up and it keeps going up over the next 6-7 months, and you like it, and that's great. eBay is a name that I would say I like. I like long term. GM, a name that I've stated, I like long term. ATVI is one that hasn't been trading well because of the opening, but I like long term. Any name that we've been talking about that we're looking at 4, 5, 6 months. Yeah, I mean it's a story that is growing, and it could be that big of a story going. We're looking at oil, and I don't think oil is going to go away in the next year, even though the whole EV thing and the whole clean energy complex is growing. It's still 5, 6, 7 years away, and a lot could happen there. And that's, you've seen some of these big oil names come. So you get oil trade 80 or 90. You get a war starting in the Middle East, trades 100, 120. Where do you think these oil names are going to go? They're going to rocket. And I think that the my impression is that the CIA is warming up to get going. I think Trump didn't want to go to war. I think the CIA has more control in this administration of what they want to do and their agenda. And it seems like there's a lot of things heating up in the international space, and I don't know what that means, but you don't call the Russian prime minister a killer without him thinking you're a jerk. Like we'll see, you just don't do that. You have people going over to China, and they're sitting down, Biden administrations, and right off the bat they were saying doesn't sound like it's going to be good, from the jawbone back and forth. So I don't know what's going on. There's a lot of stuff going on in the Middle East. It's starting to get hot again. Iran, North Korea is mouthing off now, saying, what, I don't know if they think Biden's soft. I don't know if people are just saying, yeah, let's see how tough you are, because they're pressing him to make a move. What do we do to stand up strong? We still have a very good military, probably the best in the world, but China's not far behind. And they talk about war games. They're playing war games in over Taiwan, and they lose every time. There's an article, I think on CNBC, I was reading, I was like, wow, that's pretty interesting. The generals play these war games to see how it would play out in China. They lose every single time. It's not even close. So they actually said, one of the generals, like, we're not even going to play it again. Like, we got to figure something out. But it wouldn't even be close. It seems. I mean, you got China's military all around there, and we're going to send. I don't know. God forbid that happens. That it's hopefully it's so far away from happening that we can come up with some sort of peaceful negotiation before that. But the CIA. I didn't think the CIA, the defense people make money. They make trillions of dollars at stake. Trillions. They figured out over the last 5-6 years, there's trillions of dollars that are not accounted for in the budget. Trillions that somehow get leaked out. It's like, in the Pentagon's, the Pentagon has to have a budget, and they say how much they spend. They tell you like 10% of it, and then there's like 80-90% of it that 10-20, they tell you 80-90% of it that you don't even know. Black box. It's special. Nobody knows. Just the president of the United States. So I don't know. I think it's a tangent, but the idea is that long term for options is great. Long term for stocks is great. Has worked for a long time. Options. This is for stocks and options users. And I think we're just trying to find trends and pockets of great risk reward.
Great. Awesome, Felix.
So it's a long answer to a simple question.
Yes. It was good. And I want to just point out one thing is a lot of people have been requesting merch, and I want to announce that we're in the process of making merch. And I also want to ask people, what do you want to see? What do you want to see? Hoodies, t-shirts?
Yeah, that's good.
Mugs.
We've been talking about this.
Yeah, let us know in the comments below. We're really, really looking forward to, making that come true. And then one more question, Felix. It's
sure.
Yeah, here it is.
Dwayne Hill. A lot of people ask me about learning options. What link should I share with them? I would just say, optionsgeek.com. Tell them to start there. We're going to try to revamp that to make it. We're just talking about that today. Try to revamp that to just make it easier. But optionsgeek.com. There's a free membership there. Everything is. I've tried to make it very easy. I may or may not have succeeded, but we're gonna try to try to make it easy for people to go land there, know exactly where to go to hit the podcast, the tools, and the education. But I would say the one thing that's very interesting, very, very interesting, talking about the website, and there's a lot of great stuff in the free membership. I know people give away free stuff, and it's not that great. I know this. I've done a lot of research over the last 10 years on what's out there. So I understand when people say it's free, they think there's no value. What I did, and I showed you earlier, I showed you step one. I'm telling you that class plus the options challenge, which I give in the free membership. I give you that one without an email just to show you there's a lot of great stuff in the free membership. Okay. And once you get comfortable with that, then you can buy 3 Steps to Profit. Then you could see what we're all about. I have no problem. I'm going to be here for a long time. Okay. But what I'm saying to you is take a look at what we're doing. Listen to what we're doing. Hear the comments and see that we're trying to help everyone in all facets, whether it's stock users, whether it's option users. But I think that's important to feel it yourself. I don't want to sell anybody. I think it's the best options education on the planet. That's what you're going to get from me every single time you ask a question. But what I want people to do is figure it out for themselves. Okay. Watch the podcast. Tell them to watch the podcast. Tell them to jump on the top 1% free membership. Tell them that's the place to start. Let them make up their minds. Okay. If they can't find value in that after seeing anything else out there, man, I'm doing something wrong, because I've looked at everything else out there. So I know what I've built. Okay. So yes. I would say I feel comfortable. Show them the podcast, show them the top 1% club, get them involved. And I think people will love it. If anybody, I have never in 25 years, even when I was on Wall Street, I have never lost the attention of someone that wanted to learn options. And I think, I'm going to keep doing it here, because if you want to learn, there's no better place.
Exactly. Awesome. Thank you, Felix. Thanks, everybody.
Right.
Have a great weekend.
Have a good weekend. All right. Be good.
See you all.